Latch, a startup that develops software to help employers combat big resignations, has tripled its valuation to fight the Great Resignation. Managers need strategies to help retain employees. Enter Lattice, the startup, which makes software for companies to track and reward employee performance, has experienced a surge in demand as businesses grapple with a changing workplace. And investors are taking notice. Lattice is now valued at $3 billion after a new investment insider has learned. The company raised $175 million in the deal, which highlights investor fervor for technology that helps employers recruit, hire, and retain their workforces. Thrive Capital, Tiger Global, and ELAD Gil Coldy the financing, with participation from existing backers including Dragoner, Founders Fund, Highs Age Ventures, Shasta Ventures, Fuel Capital, and Khosla Capital. The funding comes less than a year after a Series E round valued the company at $1 billion in March. Lattice, whose clients include Slack, Asana, and Samsara, was growing before the pandemic, but the shift to remote work threw its business into hyperdrive. Jack Altman, its co-founder and CEO, said in an interview, "In the pandemic, managers have lost their ability to casually check in with their direct reports in meetings or in the halls. Lattice's software helps them give and get feedback more frequently, through reviews, surveys, and goal setting. Once companies go remote, you need some system to capture these things more often," Altman said. Investors predict the return to the office likely won't happen this year, so employers need to invest in a new backend to manage their employees, wherever they are, said Marin Bannon, a founding partner at January Ventures. WHO has not invested in Lattice, but has backed future of work companies such as OfficeTogether, Gable, and ETHN. The trend of people quitting their jobs makes the need all the more urgent. People are now free to move about the globe, and if employers want to keep their people, they're going to have to break their old ways of attempting to do so. Caitlin Holloway, a founding partner at the venture firm 776 and a strategic advisor at Lattice, said, "The new importance of people's strategy has led to major investment in tech startups, building for HR. Last year, investors plugged $12.3 billion into the space globally, a 259% jump over 2020, according to PitchBook data. Lattice didn't need to raise more funding when it did, but the cash infusion gave the company the ability to pursue our goals a little more aggressively," Altman said. After it laid off about 10 employees at the start of the pandemic, the company tripled in size to 485 employees in 2021, and it plans to double again this year across teams and cities. The new investment brings Lattice's total funding to over $330 million and will be used to fund hiring and product development. The company recently expanded its offerings from performance reviews to goal setting and compensation tools. Gil, a longtime investor in Lattice, predicted the company would someday own the HR tech stack. It will keep building new products but may also consider acquiring other companies. He said, "The explosion of new tools for managing the workplace suggests some consolidation may happen, with small vendors getting gobbled up by bigger ones. I think Lattice has a really good shot of being one of the main consolidators of the market," Gil said. The latest funding was a bit unusual because 3 investors Coldy, which typically means they write similar checks for similar stakes. The structure came out of an enormous amount of enthusiasm to fund the company, Gil said. The megaround may position Lattice for a public debut after a banner year for tech initial public offerings. But when asked if the company was entertaining the idea of going public this year, Altman declined to comment. "We're trying to build a company that can last," Altman said.